In this chapter, we will cover the process for understanding internal control and assessing control risks. At the end of chapter 12, you should be able to do the following. You should be able to obtain and document an understanding of internal control. Assess control risks by linking key controls and control deficiencies to transaction-related audit objectives. Describe the process of designing and performing tests of controls. Understand how control risk impacts detection risk and the design of substantive tests. Understand requirements for auditor reporting on internal control. Describe the differences in evaluating, reporting, and testing internal control for non-public and smaller companies. And lastly, be able to describe how the complexity of the information technology environment impacts control risk assessment and testing. Let us begin by discussing how to obtain and document an understanding of internal control. Auditors need to understand controls that are relevant to financial statement audits in order to identify and assess the risk of material misstatements. There are 4 steps in the process of understanding internal controls. These steps are obtaining and documenting understanding of internal control, assessing control risks, designing, performing, and evaluating tests of controls, and lastly, deciding planned detection risks and substantive tests. In here, we have an overview of the process of understanding internal control and assessing control risks. This figure shows that there are 4 steps in the process, which we have discussed in the previous slide. We will also discuss these 4 steps in a lot more details in the later slides. You can find figure 12-1 on page 368 of your textbook. The first process for understanding internal control and assessing control risks is obtaining and documenting an understanding of internal control. The auditors use different types of procedure to obtain an understanding of internal controls. Some of these procedures are the use of narrative procedures, which are written description of the client's internal controls, which may include the origin of every document and record in the system, a description of all the processing that takes place within the entity, the disposition of every document and record in the client's system, and an indication of the controls relevant to the assessment of control risk. Flowchart is a procedure used to diagram a client's documents flow in the organization. In contrast, an internal control questionnaire procedure involves asking a series of questions about the controls in each audit area as a means of identifying internal control deficiencies. In here, we have an illustration of a section of an internal control questionnaire for the sales and collections cycle for a sample company called Hillsburg Hardware. Observe how the questionnaire incorporates the 6 transaction-related audit objectives A through F, as each applies to the sales transactions. The same is true for all other audit areas. This illustration is the second part of what was previously seen in the previous slide for figure 12-2. You can find this figure on page 370 of your textbook. In addition to understanding the design of the internal controls, the auditor must also evaluate whether the design controls are implemented by management of the entity. The auditors use the following methods to evaluate implementation. These methods are updating and evaluating the auditor's previous experience with the entity, making inquiries of the client's personnel, examining documents and records, observing entity activities and operations, and performing walkthroughs of the client's accounting system. Moving on, we will now discuss assessing control risk by linking key controls and control deficiencies to transaction-related audit objectives. The auditor makes a preliminary assessment of control risk based on entity-level control risk as well as information technology general controls. Many auditors use a control risk matrix to assist in the control risk assessment process at the transaction level. The purpose is to provide a convenient way to organize assessing control risk for each audit objective. Components of the matrix include the identification of audit objectives, the identification of existing controls, and associating controls with related audit objectives. You can find a sample matrix in figure 12-3 on page 373 of your textbook. The auditors must evaluate whether key controls are absent in the design of internal control over financial reporting. Auditing standards define 3 levels of the absence of internal controls, which are control deficiency, significant deficiency, and material weakness. Control deficiency exists when the design or implementation of internal controls does not permit company personnel to prevent or detect misstatement. Significant deficiency is a deficiency that is less severe than a material weakness, but important enough to merit the auditor's attention. A material weakness exists if a significant deficiency or a combination of significant deficiencies result in a reasonable possibility that internal control will not prevent or detect material misstatement of the financial statement. A 5-step approach can be used to identify deficiencies, significant deficiencies, and material weaknesses. The 5 steps are the identification of existing controls, identification of the absence of key controls, considering the possibility of compensating controls, deciding on whether there is a significant deficiency or material weakness, and lastly, determining potential misstatements that could result because of the significant deficiency or material weakness. In here, we have an illustration of the evaluation of significant control deficiencies. The horizontal line depicts the likelihood of a misstatement resulting from the significant deficiency, while The vertical line depicts its significance. If there is more than a reasonable possibility that a material misstatement could result from the significant deficiency or deficiencies, then it is considered a material weakness. You can find figure 12-4 on page 375 of your textbook. When associating control deficiencies with related audit objectives and or assessing control risks for each related audit objective, the control matrix is useful to the auditor in assessing control risks. In here, we have an example of deficiencies in internal control for Hillsburg Hardware Company. It includes two control deficiencies. Neither deficiency was considered a material weakness. The first weakness, which is related to pre-numbered sales invoices, was considered a significant deficiency by the auditor. You can find figure 12-5 on page 376 of your textbook. We will now discuss the process of designing and performing tests of controls. The purpose of the test of controls is to test the effectiveness of controls in support of a reduced control risk for the audit. The auditor uses 4 types of procedures to test controls. These procedures are to make inquiries of appropriate client personnel, to examine documents, records, and reports, to observe control-related activities, and to reperform client procedures. The extent to which tests of controls are applied depends on preliminary assessed control risk. If the auditor wants a lower assessed control risk, more extensive tests of controls are applied, both in number of controls tested and the extent of tests for each control. The extent of tests of controls is also dependent on the reliance on evidence from the prior year's audit, testing of controls related to significant risks, and lastly, testing less than the entire audit period. There is significant overlap between the test of controls and procedures to obtain an understanding of internal controls. However, there are 2 primary differences in the application of these common procedures. The first difference is when, in obtaining an understanding of internal control, the procedures are applied to all controls identified during that phase. In contrast, the test of controls are applied only when the assessed control risk has not been satisfied. The second difference is when procedures to obtain an understanding of internal controls are performed on only one or a few transactions. In contrast, the test of controls are performed on larger samples and often at more than one point in time. This concept will be illustrated in more detail in Table 12-1 on the next slide. Table 12-1 in here illustrates the relationship of assessed control risk and the extent of procedures performed by the auditor. One option is to perform the audit procedures separately, where minimum procedures to obtain an understanding of the design and operation of internal controls are performed, followed by additional tests of controls by the auditor. An alternative procedure is to combine both columns and do them simultaneously. The same amount of evidence is accumulated in the second approach, but it is done more efficiently. The determination of the appropriate sample size for test of control is an important audit decision. You can find Table 12-1 on page 380 of your textbook. When clients use service centers for processing transactions, the auditor may need to obtain an understanding of the controls of the service center. It has become increasingly common for service centers to engage their own CPA firm to obtain an understanding necessary for an audit and to issue a report to be used by the auditors of their customers. Moving on, we will now discuss how control risk impacts detection risk and the design of substantive tests. The completion of assessing control risks for each related audit objective and the support of control risk assessment with the test of controls is sufficient for the audit of internal control over financial reporting. The auditor uses the control risk assessment and the results of test of controls to determine planned detection risks and related substantive tests for the audit. The auditor links the control risk assessment to the balance-related audit objectives for the accounts affected by the major transaction types and to the 4 presentation and disclosure audit objectives. On the next slide, we will cover the requirements for the auditor in reporting on internal control. The auditor must communicate significant deficiencies and material weaknesses in writing to those charged with governance as soon as the auditor becomes aware of their existence. An example of a report used in the audit of a non-public company will be shown in Figure 12-6 on the next slide. Management letters are not required by auditing standards, but auditors usually provide them when less significant internal control related issues do exist. In here, we have an example of a report used in the audit of a non-public company. If you look at the structure and content of the management letter and then compare it to the auditor's opinion report, you will observe a difference between the two. You can find Figure 12-6 on page 383 of your textbook. The auditor is required to issue an audit report on internal control over financial reporting for public companies subject to Section 404B of the Sarbanes-Oxley Act reporting requirements. The auditor will issue an unqualified opinion on internal control over financial reporting when 2 conditions are met. There are no identified material weaknesses as of the end of the fiscal year, and there have been no restrictions on the scope of the auditor's work. The auditor will express an adverse opinion on the effectiveness of internal control over financial reporting when 1 or more material weaknesses exist. A scope limitation requires the auditor to express a qualified or a disclaimer of opinion. In here, we have an illustration of the definition of material weakness and opinion paragraphs from an auditor's separate report on internal control when the auditor expresses an adverse opinion on the effectiveness of internal control over financial reporting because of the existence of a material weakness. If the material weakness has not been included in management's assessment, The report should note that a material weakness has been identified by the auditor but was not included in management's assessment. You can find Figure 12-7 on page 384 of your textbook. On the next slides, we will cover the difference in evaluating, reporting, and testing internal control for non-public and smaller companies. Most of the concepts in this chapter apply equally to audits of companies of all sizes, both public and non-public. The differences for smaller companies that are not subject to Section 404B of the Sarbanes-Oxley Act requirements is there is no requirement for a report on internal control for smaller companies or non-public companies, as well as the extent of internal controls may be less extensive for smaller companies. For example, adequate separation of duties is difficult for a smaller company. In addition, the extent of understanding needed is sufficient to assess risk for the audit. The auditor will assess control risk at maximum when controls are ineffective or non-existent for any audit objectives. And lastly, the auditor will not perform tests of controls when control risk is assessed at a maximum. In here, we have a graphic illustration of the difference in the extent of testing in audit of internal control and an audit of financial statements. As you can observe, internal controls used to assess control risk below maximum must be tested in an audit of financial statements. Internal controls over financial reporting must be tested in an audit of internal controls. You can find Figure 12-8 on page 386 of your textbook. We will now discuss how the complexity of the information technology environment impacts control risk assessment and testing. When traditional source documents and accounting records exist only electronically, the auditors must change their approach by auditing through the computer. This can be done using several approaches such as the test data approach, the parallel simulation, which auditors commonly do using generalized audit software, and lastly, the embedded audit module approach, where auditors insert an audit module into the client's application system to identify specific types of transactions. In here, we have an illustration of the use of the test data approach. In this approach, the auditors process their own test data using the client's computer systems and application program to determine whether automated controls correctly process the test data. When using the test data approach, auditors have three main considerations. First, where the test data should include all relevant conditions that the auditor wants tested. The application programs tested by auditors' test data must be the same as those that the client used throughout the year. And lastly, the test data must be eliminated from the client's records. You can find Figure 12-9 on page 388 of your textbook. Figure 12-10 is an illustration of a parallel simulation. Auditors often use auditor-controlled software to do the same operations that the client software does, using the same data files of the client. The purpose is to determine the effectiveness of automated controls and to obtain evidence about electronic account balances. Whether testing controls or ending balances, the auditor compares the output from the auditor's software to the output from the client system to test the effectiveness of the client's software and to determine if the client's balance is correct. You can find Figure 12-10 on page 388 of your textbook. Table 12-2 includes some of the common uses of generalized audit software. Generalized audit software is used to do parallel simulation. Audit uses include the comparison of data on separate files, the examination of records for quality, completeness, consistency, and correctness, the selection of audit samples, the summary of data for analysis and comparing data through other audit procedures with company records. You can find Table 12-2 on page 389 of your textbook. This is the end of the discussions for Chapter 12. We covered the auditor's responsibility for understanding, evaluating, and testing internal controls. We also covered in this chapter the process in assessing control risk and the impact of a more complex information technology environment on control risk assessment and testing. Please complete the required evaluation method for Chapter 12 as it will be part of your final grade. Use Blackboard to complete the requirements. You have reached the end of the course presentation for Chapter 12. Please access the video for Chapter 13 for the next presentation of the course.